All right, hi everybody, and welcome to this program of the Arkansas Small Business and Technology Development Center. We are a cost-free small business assistance program located in Fayetteville, Arkansas, with locations throughout the United States. But our office obviously is here in Arkansas. We've got other offices that are associated with every major university in the state for the most part. ASU. ASU Jonesboro, UALR, South Arkansas, Magnolia, a couple of others, Mountain Home as well. So if you're ever in any of those locations, we've got locations there as well. We're obviously affiliated with the University of Arkansas. We are a one-stop shop for small business owners to help start and grow their businesses. And again, my name is Scott. My background is primarily in business finance. I've owned two of my own small businesses with my wife previously, and now I do this for a living and really enjoy it. If you need to get in touch with us or if you have any other questions, there's our phone number there on the screen. It's 479-575-5148, or our website at sbtdc.uark.edu. And then the generic email that'll go to our receptionist if you need to get in touch with us as well as there at sbdc@uark.edu. Really would encourage you to go to our website, as most of you have probably already done in order to sign up for this webinar. But if you haven't clicked the resources page yet, we've got a whole lot of really great resources on that page that we're constantly adding to. And the recording of this video will be added to that resources page soon as well. Again, my name is Scott. I've been a consultant here for a little over 2 years now, primarily focused on the area of finance and small business financial management. I do a lot of consulting, helping people get loans, or just do strategic consulting for the direction of their business. And also help a lot of entrepreneurs with business feasibility studies and some business valuations as well. All right, so today, this is not the fall finance series, it's just the fall business financial management series that's left over from last year. We are going to be tracking and evaluating performance, learning how to track and evaluate the performance of your business. All right, so real quickly before we dive in, I do just want to say one quick thing, that this is an introduction. This is going to be about a 30-minute long webinar. It's not meant to be exhaustive. It's meant to give you an introduction to help you know some of the introductory things that you should know in order to be able to track and evaluate the performance of your business. Every business is very different, and we want to be able to introduce you to some of these concepts so then that you are able to either talk to your CPA or talk to your business partner, or come in preferably and talk to one of the consultants in the office to have a one-on-one consultation where we can specifically address your business, because not every business tracks the same. There are some specifics to different businesses. We want to be able to help you set up and do those things. So you'll be able to leave today with some very basic tools to be able to track your business and sort of see how you're doing. But we could definitely help you extensively more if you're able to set up a one-on-one consulting appointment. And so please feel free to go ahead and do that with me. There is my email there in the middle of the screen, sl072@uark.edu. Just shoot me an email now or later, and I'd be happy to set up an appointment with you. Additionally, if you've got questions at any point during this webinar, you can either at the bottom of your Zoom screen, you can click chat, or you can click Q&A, and you can put your question in there. And then at the end of the webinar, I will get to those questions. All right. So again, like I said, this is just an introduction on how to track the performance of your business and what to track in order to know how your business is performing. So we're going to look at how to track and what to track. So first, I want to teach you how to track. So this is just sort of the basic 5 things that need to happen in order for you to be able to track the performance of your business. So the first thing you need to know is you need to know, or you need to learn what you need to know. There is a lot of information that is created, a lot of data that's created within your business every single day. You know, your sales, your expenses, just to name the 2 that everybody knows, but much more information, much more specific information, sometimes much more complex information. And it's not always intuitive what exactly those things are and how they sort of fit together with maybe other parts of your business. And just like any skill, you have to learn that skill. Learning finance, learning small business financial management, that is a skill as well. And some of you might be great chefs, some of you might be great, welders, you might be great, product retailers. You might be really great at, marketing for for other people's businesses. You might be really great at whatever you're really great at. But what a lot of entrepreneurs don't have, what skill that they have never learned before, is small business financial management. And just like your skill is a skill that you had to learn, and not all of it was intuitive, small business financial management is a skill that needs to be learned as well, and not all of it is intuitive. So you've come to the right place in order to start the process of learning what you do need to know in order to be able to track how well your business is doing and how well your business is performing. Well, the second thing you need to do, you need to get set up with either a consultant here at the ASBTDC or with a CPA in order to get your accounting system or your bookkeeping and record keeping system set up in order to be able to monitor the health of your business. And that's something sometimes you can do on your own at a very basic level, but we can give you many more tools and many more effective tools if you can come in and talk with us and get a custom setup done, or if you can talk with your CPA about maybe how your business should be set up to give you the information that you have learned that you need to know. The third thing that you need to do, and this is where unfortunately a lot of entrepreneurs, they just don't understand, or things just kind of fall apart because they get too busy. But it's that in order to get the information that you need from your CPA, or from the information that you're plugging into whatever tool that you're using to keep track of your revenue and your expenses, you've got to do your part. And by that, I mean, you've got to provide the data. So on a weekly basis, you've got to make sure that you're, keeping and organizing your receipts and sending those to your accountant, or logging those in some kind of internal system that you've set up for yourself in order to be able to plug into Google Sheets, or, a notebook, or, any other system that you've decided to set up for your business. That generally this is the first part of the entire system that tends to get neglected. And then a few months down the road, we're trying to make decisions based on, bookkeeping data that you've given or financial statements that you've given. And generally it's incomplete because the entrepreneur hadn't done their part because they got too busy, or they didn't understand what they were doing, or they didn't see the need to keep track of every penny. But that's the third thing really that you've got to do, that I want to start emphasizing with all of our entrepreneurs, is that on a weekly basis, you've really got to do your part, provide that financial data to the person who's recording the financial data. The fourth thing you need to do is you need to be checking in with your bookkeeper or your CPA at least on a monthly basis, if not every other week. You should be at least sending an email back and forth, probably once every couple of weeks, probably a phone call at least every month once you get your financial reports. But you need to be checking in with them. One, to make sure that you're getting the information that you need, or that you're seeing what you feel like you need to see. But two, also because sometimes, bookkeepers get busy, CPAs get busy. They're trying to get more business. They're trying to do sales. They're an entrepreneur just like you. And sometimes, it's the squeaky wheel that gets the grease, unfortunately. And when it comes to your books and getting your financial statements back to you on time for you to be able to analyze and make decisions based off of, sometimes you've got to be that squeaky wheel. Most of the times you've got to be that squeaky wheel. But if you have to be that squeaky wheel every single month, then it may be time to find a new bookkeeper or CPA. But definitely be checking in with them. You should be having regular communication with them, not several hours a month, but at least, a couple hours a month for sure. And so then the fifth thing is, once you have provided the data to your CPA, or to whoever's doing your books or keeping your financial system, and you've checked in with them and you've gotten the information back, then you've actually got to sit down with that information and do the analysis of the information and plan the way forward based on the information that you have. So this is just sort of the general overview of how to track your business and the things that you should be doing every single month in order to be able to track how your business is performing. Okay, so now we're going to get into what to track and exactly sort of what that flow looks like. I'm going to give you an example. I'm going to show you some QuickBooks stuff. I'm going to show you some Microsoft Excel stuff, and then we're going to get into it a little bit more. So what do you want to track? If I was just going to introduce you to basic business financial management, which is what today is, just to keep things as absolutely simple as possible, the two things that I would want you to track would be your profitability, and the second would be your cash flow. And just keep in mind that those two things aren't the same thing. Profitability does not reflect all of your cash flow in and out of your business. And cash flow doesn't always include all of the expenses on your income statement, which is where profitability is tracked. So keep in mind And keep in mind that these are generally the two most important things, or at least the two most urgent first things that you want to be tracking. You do want to track some things like that are on your balance sheet, of course, later on, and even some things that aren't on your financial statements. But if I was just going to give you two quick ones today, in a limited amount of time that we have, it would be these two: the profitability and cash flow. So given that we want to track profitability, profitability is tracked on the income statement. I'm going to show you the sample income statement here in just a second. What items do we want to track in order to track our profitability? And these six things, these six items, can all be located on an income statement. And these are the six things I want you to track. These are the six things that I'm going to go over with you here in just a second after I review what these terms are. And this order also reflects the same order that they are on in the income statement. And again, if you've got any questions at all, put them in the chat box or the Q&A box for me, and I'll be happy to answer those for you. So at the very top, we got revenue. You want to make sure that you're tracking your revenue. Another word for revenue would be sales. You want to make sure you're looking at that, if not, daily, then at least weekly, but no less than monthly for sure, and then month to month as well. The next is your cost of goods sold, or your cost of sale. So what is cost of goods sold and cost of sales? Well, it sort of depends on whether or not you're a service-based business or a product-based business, like a physical product, like retail type business. We're going to get into that here in just a second. But the cost of goods sold represents really the core of what your business is, as far as what it costs you to deliver the products or the services that you're providing. So at the top, you've got your revenue, which is the money that's coming into your business from your sales. But then the cost of goods sold is the cost to you, or the cost to the business of the goods or the services that you're providing directly. So for instance, if you're selling toys, this is how much it costs you to acquire the toy. If you are providing a service to somebody, like a cleaning service to somebody, then the price of delivering that service is going to be the price of the person who is actually doing the physical manual labor of cleaning, plus the supplies that they're using. So it's the most directly attributable cost to the delivery of the service that there is. And we're going to continue explaining that as we go along. So the next on the list is gross profit. Your gross profit is just the money that's left over after you subtract your cost of goods sold from your revenue from your sales. Let me say that one more time. Gross profit is the profit, or what's the money left over after you subtract or after you deduct cost of goods sold or cost of sales from your revenue or from your total sales. So it's number one, if I'm going by numbers listed on the page in front of you, it's number one minus number two equals number three. The fourth one down there, SG&A, that stands for sales, general, and administrative expenses. So these are less what I would consider, or what I call less core expenses related to the delivery of your products specifically. So sales, general, and admin, every single business is going to have these expenses generally. It's things like rent, utilities, costs for secretaries or administrative staff, paper for your printer, ink, your accounting software, your website, all of those things I just listed. Pretty much 99% of businesses out there are going to have those expenses. And the difference between SG&A expenses and cost of goods sold or cost of sales expenses is that if you're a toy business, if you're a cleaning service business, you're not going to have the cost of purchasing toys, because you don't sell toys, you sell cleaning services. So those services that are specific only to your business are typically different and separate from your SG&A expenses, which, just speaking very broadly, are expenses that almost every single business is ever going to have. So just think about your expenses in terms of, if you're trying to split them up between cost of goods sold or cost of sales and SG&A, or sales, general, and admin, just think to yourself, does any other business that I know of that's not in my industry have these expenses? If they do have those expenses, it might be a direct cost of delivering your service, and it might be part of cost of goods sold. If those other businesses not in your industry do have those expenses, then it's probably more likely in sales, general, and administrative expense. And the sales, general, and administrative expense generally is a measure of just not trying to be crude, but how much of a like bloat your business, like an administrative or bureaucratic bloat, is required for your business in order to be able to operate it. Some can run, super lean, very low administrative staff, very low, administrative type expenses, very low marketing expenses, even in order to deliver all the services. Other companies have to have huge SG&A budgets and expense items in order to be able to operate their businesses. After SG&A, we have EBITDA. Some of you, if you watch Shark Tank, you've probably heard this a whole lot, but it stands for earnings before interest, taxes, depreciation, and amortization. And the reason that we have EBITDA, the reason it's a term that we tend to use, is because it takes out some other expenses like interest, taxes, depreciation, and amortization that are things that tend to skew how well a business is actually doing, and what how the core business is actually performing. So if we remove the ITDA, the interest, taxes, depreciation, amortization, sometimes we get a better idea of how the business is actually performing. And sometimes, not always, but sometimes EBITDA can also be referred to as what we call operating profit. So then you'd have number 3 would be gross profit, number 5 would be your operating profit. And then last on the list, at the very bottom line, after you deduct interest, taxes, depreciation, and amortization, you would come out with number 6, which is the net profit. So these are the things that, if I was just going to say to you today, these are the things you need to be tracking that you can probably go out and do on your own, or that I'm going to set you up first when you come in to have a consulting meeting with me. These are the 6 things that I'm going to set you up with to make sure that you're able to track on a regular basis, preferably at least monthly. All right, so now we're going to get into an example. All right, so what I've done, give me just a second. Let me get QuickBooks pulled up. So if you want to play with QuickBooks, there is an option called QuickBooks Test Drive. And if you just Google QuickBooks Test Drive, it'll pop up right here. You want to test drive QuickBooks Online, and it's going to give you a free sample QuickBooks to mess around with. So you can do QuickBooks United States, just regular, or Online Advanced. I'm going to go to Online Advanced. And it's going to pull up the test drive version for you with just a random made up company that doesn't exist. So we've got Craig's Design and Landscaping Services here. It's just a fake made up business. And so if you want to see the things that we were just looking at, if you've got your accountant doing your bookkeeping, or you're doing your bookkeeping, then you're going to be able to go into QuickBooks or whatever financial software you're using, whether that's FreshBooks or Zoho, or I think there's another one out there called Wave that's free as well. But any of these, you'll be able to pull very similar reports to be able to see your sales, your cost of goods sold, your gross profit, your SG&A, your operating profit, your EBITDA, and your net profit as well. And so in QuickBooks, you just go to Reports and click Reports. And then the first one you're going to look at, all of that stuff is located on what's called the profit and loss, or the income statement. So you'll just click that. And then here pops up our income statement. So at the top here, let me minimize all this down so you can see the whole thing. We've got our income or our sales, then we've got our cost of goods sold, then we've got our gross profit, our expenses. All on here is going to be SG&A, then our net operating income, and then our net income down here. So you can see down here, or start at the top, $10,000 in income, $400 in cost of goods for a gross profit of $9,800, SG&A of $5,200, operating of $4,500, some miscellaneous expenses, and a total net income of $1,642 on an operating income of $4,558 and a gross profit of $9,795. So if I want to analyze this, what you want to do is you want to look at, the individual month, obviously, and see how you did. But then here's where the real value of this comes from. It comes from being able to compare all of these metrics, or all of these amounts, to previous month's performance to see how well you're doing, to make sure that, if it's a slow time of year and you're expecting it to be a slow time of year, are things slowing down about as much as you thought they should slow down, more than you thought they should slow down, or are you actually doing better than expected? Or if you're a business that never experiences seasonal lulls, if you think that you should just be continually, growing on this upward trajectory, then you can see if there's any months that you're kind of going downhill compared to the previous months, and you'll be able to forecast forward and see how you're doing. So how do you do that? How do you compare these amounts month to month in a simple and easy way? So let me show you how we do that. If you go into QuickBooks, we've got this year to date, so we've got January 1st, 2022 to today. But if I want to see it by month, what I'm going to do then is go to display columns by month. And almost every financial software that's out there is set up very similar to where you can do that. And then I'm going to click run report. And then it gives me my income statement by month here. So every single month. So it looks like they opened in January, but didn't start having sales until March. And then if I wanted to evaluate these more in depth, I can do so with some ratios and with doing some basic math. Sorry about that. And the way that you would want to do that is you would want to export this to Excel by just clicking this little button here and then clicking export to Excel. And what that's going to do is give you one of these nice spreadsheets. And I've already started doing some work here for you on that. All right, so what I did is I just exported this report to this spreadsheet. Now, this business is a real business. This isn't the Craig's Landscape and Design business. This is a real client of mine that was a success story that I'm not working with currently because he's doing great. But I've anonymized all of the data here, so you won't be able to tell who it is or know anything like that. So confidentiality there is protected. So like I said, you want to be able to evaluate your total revenue, your total sales. Sometimes we also know there's your total income, your cost of goods sold, your gross profit, then all of your SG&A, your net operating income, and then your net profit down here is what we did. So how do we do this? How do you track your performance to see how you're doing month to month? So one way, you can just look month to month, January, February, March, and you can just look at the number, 23 in January, 25 in February, 32 in March, 37 in April. So we're going up. All of a sudden went way down in June. What happened? So sometimes just looking at the absolute number can give us a good idea of what we're doing. But generally for total income or for sales, what most people like to know is by what percentage month over month is my business growing in the sales department. And so the way that you do that is I went in here and added columns between each column. And if any of you have trouble with Excel, I would be more than happy to help you with it. I can teach you. I can't always do everything for you because I'm not allowed to by the terms of our grant, but I can definitely help you and coach you and get you set up. So I added some columns in between, and then I just compared through some math these 2 months. So if I wanted to know how much of an increase month over month were my sales from January to February, when my sales were 23 and 25, almost 26 comparatively. So I just did a little math. The math is going to be the current month minus the previous month divided by the previous month. And you can see that in this formula here. It's the current month minus the previous month divided by the previous month. And that the result of that formula gives me a 10% increase in my sales month over month. And then I just copied that formula over to all of the other cells for total income. You can see in this month, my sales grew by 10%. And then in March, they grew by 24%, but then I was actually down a little bit. Even though I was up in absolute numbers from 32 to 37, my percentage growth was down. So you can see this has actually increased, but my percentage growth is down. And so you'd want to look more closely into, what exactly happened. Your sales are still increasing, but not as aggressively. Why might that be? Would be something that you would want to look into, and we can help you figure out. And then 12% And then all of a sudden in June, we've got this negative 50% growth, even though, we still do have money. So like, what happened? What's going on in June? Why are people buying less product than me? And then you can do the same thing for cost of goods sold, except instead of comparing month over month, what you want to do is you want to compare what did it cost me? What were my costs of my goods sold to sell $23,603 worth of product? And so this month, my cost of my goods that I sold $23,000. My cost to sell those, the cost of my direct labor or the cost of my, direct product purchases if I'm buying inventory were 41% of my revenue or of my income or of my sales. And in business, this is typically one of your most important expenses that you want to track month over month, because this is really a measure of, are you selling effectively at an effective price the goods that you've purchased? So if you purchased a toy for $10, and you sold it for $20, that's great. But if you purchased a toy for $10 and you sold it for $40, well, that's even better. But if you bought a toy for $10 and sold it for $5, well, that's really not good. And the way that we know how well you're doing in really easy to understand terms is by converting this into a percentage. And it's simply this number, cost of goods sold, divided by the total income, so 41%. So then the question is, okay, how have I done the first 6 months of the year, my cost of goods sold? Have my cost of goods sold expense sort of stayed steady as a percentage of my revenue? Or have they gone up because we've got inflation right now? Is inflation really affecting me or not? So the first month in June, it was 41%, and then it was actually down. It was 28%, back up to 37, 37, 28, and then dropped down to 19. So we've got some variation in here. If anything, we've got a little bit of a decrease, which is strange because of inflation. Wonder why that might be. But also wonder, why was this so high this month? What happened? There could be, several different reasons that could happen. But especially if you're a restaurant, this is one of the most important numbers that you can have, because if you can't keep these costs under control, your food costs under control, you're going to be in trouble really, really quickly. But you really want to make sure that you're looking at this. The next one will be gross profit. Very similar. You just take your gross profit, what you've got left over, your profit, divided by what your total income was. So our profitability there was 59%. So what this means here is that for every dollar of goods that I sold, 41 cents of it went to pay for my products that I sold, and I got to keep 59 cents of it. And that 59 cents is what I've got left over to pay for all of my other expenses for the business and for the rest of that month. So my gross profit here, 59% this month, 72%, 63, 63, 72, 81. So again, a little bit of variation there. Typically we want to see that be a little bit more steady. So we might want to look into that and see exactly what's going on. And so then if you wanted to come down here and do your total expenses on your SG&A. So just to show you sort of what I'm doing. So I've got negative expenses down here. That looks like some kind of error. So I'll have to fix that later. Not sure what's going on there. But let me just go over here. So my total expenses, 16,178. So what were my total expenses in proportion to my sales? I just do simple division, 16,178 divided by my total sales, and then convert that to a percentage. And I get 62%, and I can just copy that over. And then I can see 62%, 54%, 73%, 57%. And I've got a really good idea of how my business is performing. And then I've already done net income down here. That's not correct. So let's just start over here in the following month. So 10%, 9%. And so negative 10 means I had a loss here, a net loss, 15%, 11%. And then at the end out here, I can see my total for the 6 months and how I'm performing there. So you want to do this to compare month to month to see how you're doing. And generally what you want to see, obviously, is your income going up or your sales going up and your expenses going down. That's usually as a percentage is generally what you want to see as a business, or you want to see if your business is somewhat seasonal, that you're dipping down in the right month, but by the right amount, not by too much, and that you're increasing in the good months by the amounts that you should be increasing by. So then what does this look like year over year? So here we've got a year over year comparison. So instead of months, we've got years, and you just want to do the same thing. So year over year, 7% increase in total income, 11% total increase from 2019 to 2020, and then a drop, and then a big drop in 2022, but because it's only half a year. So kind of flat. And remember, this was COVID, so that was probably part of that as well. So that's generally what you want to do. Not that hard, just some basic math, nothing too complex. That's how you're going to track very simply the profitability of your company over time to see how well you're doing and to get a really good idea of how you're doing. All right, so now if we go back to the PowerPoint show. All right, so again, there's just a really simple income statement that we've been going over. So if you're a retail product company, you're going to have revenue minus cost of goods sold equals gross profit, minus sales, general, and admin gives you your EBITDA or your operating profit. Then you're going to subtract interest and taxes to give you your net profit. If you're a service company, it's going to be revenue minus, what I would encourage you to do is separate out your direct labor and your direct supplies of supplying the services to that earns you the revenue. You're not actually selling any inventory, so you're not going to have a cost of goods sold, but we can just separate out your direct labor and direct supplies in order to get your gross profit, and then everything else looks the same. You want to do it monthly and definitely annually. And that sort of wraps up what we're going to track on your income statement as far as tracking your profitability and your business performance over time. The other thing that I would track, and I'm going to wrap this up, that we don't have to get into today, but you can go back and look in some previous webinars to look at cash flow and how to track cash flow and why cash flow is important and how it's different than profitability. But cash flow, remember, that's ultimately what we can take home at the end of the day and what pays the bills at the end of the day. Profit doesn't pay bills. Profit can't get deposited into the bank account. Profit can't, go home with us at the end of the day. Cash can. And so tracking your cash is sometimes more important than tracking your profit. But even though the profitability on the income statement really tracks how well you're managing your business and how well it's performing, at the end of the day, it's not always the same as the cash that you can take home. So you want to look on your statement of cash flows to see what your operating cash flow is, to see how well your business is doing. And you want to be monitoring your cash flow forecast, which I cover in depth in another webinar on our website as well. And then sometimes, obviously, too, you're going to want to be able to track things on your balance sheet as far as your assets and your debts and that kind of thing. So those things I would keep track of as well. And if you would like to learn how to track those things, definitely go visit some of our other webinars on the website or come see me, set an appointment. I would be happy to go over those with you. Thank y'all so much for being here. If you've got some questions, just put them in the chat box or in the Q&A box, and I'll be here for a few minutes to answer those. Okay, we don't have anything over there so far, so if you want to be first, go right ahead. I'll hang on for just a couple more minutes to see if we've got any questions. All right, looks like that's it. Thank y'all so much for being here today, and please feel free to get in touch. I'd be happy to talk. Have a good day.